This key inflation data will have a lot to do with markets. After last week's hawkish Fed meeting conclusion, the dollar has gone to annual highs. Half the members on the dot plot said that we're going to be seeing at least one rate hike before the end of the year. Geopolitics dominating a lot of what's going on in the market, but fundamentals are coming back. The core PCE price index, the Fed's favored inflation index, could see some massive trading opportunities. Hello and welcome to ATFX's US core PCE price index preview. This key inflation data that is still the Fed's favored inflation data will have a lot to do with markets. And one of the big things that we did see last week, apart from geopolitical updates, of course, was the conclusion of the Fed meeting. It was Kevin Warsh's first, and it saw a more hawkish outcome. Half the members on the dot plot said that we're going to be seeing at least one rate hike before the end of the year. Bit of a flip from what we saw from Jerome Powell's last press conference, and we have seen the dollar accelerate on that. So the dollar is now sitting, and we're going to look at some of the charts soon, near annual highs against the euro and the sterling. It's broken through, I think, on CAD, yen, Swiss, and a couple of others. So interesting moves. If we get confirmation of this hawkish side of things, if we get higher numbers from the core PCE this week, should see the dollar take an extra step higher, and things could get very messy indeed from a technical perspective. So what we'll be looking at later on, we're going to have a look at the gold chart, the euro chart, the cable chart, and dollar yen. So what are we expecting from the core PCE? So the month on month is expected to show a 0.3% rise. That's not unexpected. That's fairly much in line with what we've seen. But the big one, I suppose, that's really affecting the Fed and has really affected those dot plots that we saw last week, we're expecting a 3.4% rise in the year-on-year number. That's another 0.1 up from last time out. We saw it at 3.3. And that could start getting this dollar move accelerating. Certainly if we see a 3.5 or we see a 0.4 or a 0.5 on the monthly figures, then that probably will kick in. And as we're going to have a look at in a minute, it could see some big breaks in the dollar on several of the majors and indeed in gold, and we could see these moves start to accelerate. So great trading opportunities coming up. So without any further ado, let's go and have a little look at the technicals, and there's some really good trading opportunities coming up. If you haven't subscribed to our channel, please hit the link below. We'll keep you up to date with as much as we can in the market. There is a lot going on. And so we're going to kick off on the gold daily chart. We're all probably fairly familiar with this if we've been tuning in. Sitting at interesting levels. And of course, one of the main reasons that we've been looking at dollar data in line with gold, especially in the last few months, is that gold has been moving largely in line with the dollar moves and the yield moves that we've seen in the US. So great trading opportunity for here. So here's the chart. We're sitting just off annual lows in gold. So hit a low down here just above 4,000 level. We're sitting about 41.60 at the moment. We will get, I can almost guarantee we will get at least a percentage move in gold on the back of this move. So I'll just bring us in with a little bit more detail onto that chart. So trendline support now coming in around about 40.50. As I said, that low is about 40.22. So if we get a stronger number, expect this level to be challenged. Break trades could come in underneath the 50 if you're a little bit brave, underneath the 22, and then underneath the big figure if you're if you're going to hold off for a little bit. But that could see a move accelerate, and then we're back down into the 3,000, which now seems a long way after the 5,600 that we saw earlier in the year. Conversely, of course, a little bit of a disappointment, a more dovish outlook. We would see gold rally back up to here. Resistance now coming in just beneath this 4,400 level. Also coincides with that June 17 high, which is around 43.82. So great trading opportunity in gold. We probably, out of what we're looking at today, we probably will see, due to the numbers, the greater percentage move in gold. On to euro. Very interesting chart that we've got in euro. So this is the move that we saw, and it's a little bit further dated, but I'm showing you how far back I've gone on this trend line. I haven't removed the trend line there. That was the support trend line. As you can see, it kind of acted as resistance on that initial rally, but this is the move that we saw post-Fed. So a good move for the euro, nearly 1% lower from above 116 on the day to below 115. It then had a bit of a rally. We are now sitting around it's 10 points above the annual low, which is actually over here. I think it's 114.10. It was a double low as well, double bottom down there, 114.10. It may go before. We've got a few sessions before the Fed, and it might take out some stocks below 114, but a hawkish number. So we're looking above the 3.4%, I should say, on the yearly, 0.3 on the month-on-month. Should see a break, a clean break of this 114, and then we're looking for extended moves. First stop should be down around these levels. Actually, this is just below, so it probably won't help too much, but it should open the way back to these 112s. As you can see from this technical perspective, breaks of these levels really does open the way, probably for a more medium-term trade, but all the way back down to these 112 levels. So great trading opportunity in the euro. I'll bring it in a bit more. Obviously, if it comes in a little bit weaker than expected, it should pull back maybe on those rate hike expectations, certainly closer to 1 than 2, and we should see a rally. Initial resistance still probably near this high, 115.28. That's also the former support level, 115.36. That may be faded depending on how different and how much deviation we get in the data. So great trading opportunity in euro. Going to have a look at cable today as well, because cable's traded very well on the technicals. We have had some geopolitical updates this week. Keir Starmer out as Prime Minister. We've had a nice relief rally on that, actually. Uncertainty helped to drive sterling lower, as did the stronger dollar. Most of the movers on the stronger dollar, if I'm honest, and that's why we're looking at cable for this for this dollar data, because we're going to see some big moves. We do tend to see bigger moves in cable on these numbers as well than maybe in euro and dollar yen and Aussie and some of the other majors. So here's where it goes all the way back to. So we're back down to deck 25, I think Jan 25. So long-term trend line, I'll bring it into, so we've got a little bit more detail on what we can see. So we hit a low here, 131.60. It's bounced on the announcement that Starmer resigned. We're sitting around 132.40. It gives it a bit of room to move. Stronger numbers above the 3.4. Get 0.2 or 0.3 above that, and the dollar should really race. It will challenge these levels, and if we get a break here, similar to the euro, we're probably going to look to challenge these lows down around 130. Breaks down there, it really does open the way for a bigger, and that could be on those much stronger numbers. Conversely, of course, weaker numbers, expect this level to be challenged, 133.40, and then it opens away, 200-day moving average at 134-ish, and then the next level above there is about 135.60. So plenty of room on the top side if numbers do disappoint, but I think we're all skewing towards that slightly more hawkish leaning because of what we got from the Fed. Last one, certainly not least, here is dollar yen. Now, we know we've had massive moves in dollar yen. Interest rate differentials are pointing to it moving higher. We are concerned about intervention from the Japanese authorities, Ministry of Finance instructing the Bank of Japan. We haven't seen it yet. We did see it earlier. Now, one of the reasons could be, and I haven't actually got time to get into it, but some of the yen cross charts are showing that the yen's weakening a little bit more. We'd probably see it with those euro moves and sterling moves. But against the dollar, we topped out. And once again, I'm just showing these, or how strong these long-term levels are. Bring it in here. We topped out here, 161.92. The previous high, which is like a 30-year high, all the way back at the start of this chart, was 161.99. If we get stronger numbers, there is danger that we will take it higher. And I say danger because we know the Bank of Japan don't want this. So a break here should take us higher. We should be targeting 163 plus on that move. But huge caveat, if it does go higher, beware, monitor your positions very closely, because if the Bank of Japan do come in, they could, and as they did here, take it multiple percentage levels lower very, very quickly. So interesting trade there as well. Conversely, of course, and it could come in favor of the Bank of Japan, we see weaker numbers out the US. We see a 0.1 on the month-on-month. We see it down there, 3.1, 3.2, even 3% on the year-on-year. Would prove a little bit of a relief rally for the yen. Expect to see it down here. Initial support around about 160.80. then we're looking all the way down here, sub these levels, but we've got plenty of lows along there. So imagine it will probably come back into mid-range, somewhere around there. Slight caveat with that, Bank of Japan, not dumb either when it comes to intervention, plenty of experience. They may, if we do get a weaker number, they may choose that is the right time to give it an added knock. We could see some big moves. As I said, 2.4% at the end of April. We could see another move like that. So probably the potential for the biggest volatility is in dollar yen, but excellent break trades possibly in the euro and sterling as well as gold. So probably the potential for the biggest volatility is in dollar yen, but excellent break trades possibly in the euro and sterling as well as gold. So plenty of opportunities coming up. As always, good luck with your trading. If you need anything from us at ATFX, please do let us know. Thanks very much for tuning in. Cheers.